Hello friends, this is CA Rajiv Katlawala, author of How to Profit from Technical Analysis, a book published by Vision Books in the year 2008, and we had a second edition in 2016. I'm also a trader and also a financial trainer. Welcome to this episode of the weekly analysis of the Nifty, and in this we'll try to analyze the Nifty movement and try to anticipate the next move of the Nifty in the coming week or weeks. Now here I have taken the what you are seeing on the screen is the chart of the Nifty. Now instead of the daily chart, I have taken the 5-hour chart, which is almost a proxy of the daily chart, which gives you a much better understanding of the exact levels. And that is why I many a times while doing a analysis on the daily chart, I would prefer to shift that time frame to the 5-hour chart. So I have taken the 5-hour chart here. It is almost, as I said, a proxy of the daily chart. Now the Nifty yesterday, that is on 18th of September 2020, it closed at around 11,516. There is a spot Nifty, and as we have seen in the last entire week, there was good amount of resistance to the Nifty at the 11,600 level, and therefore this 11,600 level was an expected resistance, because it was for of the last fall from the peak, that is 11,800 till 11,200 approximately. This was a retracement level. Those of you who are aware, this is a Fibonacci retracement level, 61.8%, and that is why that it is a resistance level, and that is why the Nifty got resistance at that level. So this is one reason for the resistance at 11,600, and unless and until 11,600 is broken on the upside, we will not become extremely bullish in the next week. On the lower side, I have drawn this trend line here. If you are observing this red trend line, and right now we are seeing the trend line support at around 11,300, 11,290, so 11,300. So broadly we can say that for the next 1 week, Nifty is stuck in the range of 11,600 and 11,300. Now those of you who are slightly aware of price analysis, I would like to add here that a pattern seems to be developing in the Nifty. Remember that in the last few months the Nifty has been rallying. There is an uptrend, a higher high, higher low formation, and when this peak was made at 11,800, the recent peak, the structure which seems to be developing, which I am assuming, this is right now developing structure, so I am assuming it, and that is the head and shoulder pattern. The head and shoulder pattern, this is the first shoulder, that is the left shoulder. This is the head. There is a correction to the neckline, and here you are having this second shoulder formation, so which happened in only the last week. So 11,600 is effectively, I'm assuming right now, as the right shoulder, and normally I have seen that whenever the second shoulder is formed, that is the right shoulder is formed, the correction which it takes, the fall and thereafter the correction which it takes, is around 50% to 61.8%, and in this case it is at the 61.8%. So there is a very, very high chance that this is the right shoulder, and therefore if 11,300, which is a crucial support now, and not only the crucial support trend line, but it is now the neckline. If this is the head and shoulder, then this red line becomes the neckline. If this is broken, then the head and shoulder pattern will get confirmed, and we will see a further sell-off in the markets. Now what could trigger the sell-off is anybody's guess, but the charts, the price movements are suggesting a head and shoulder pattern, and therefore traders who are having positional trades can look out for this 11,300 level as a crucial support. If that is broken, especially if that is broken with volumes, I would say, then the head and shoulder is definitely confirmed, and you are you will have lower targets somewhere near 10,800 to 10,200, sorry, 10,600. There will be a broad 200 point support here, but one thing which will be significant here to note is that head and shoulder pattern at a peak is a reversal pattern. Reversal would mean the reversal of a ongoing uptrend, and if that is the situation, then we will have to compute the retracement levels of the entire move. So entire move right from the March 23rd low till the recent high of 11,800, and in that case over a period of time, not immediately but over a period of time, I would not be surprised if the markets test 10,200 levels, which is the first retracement level, which is 38.2% of the entire rise. So this is the broad structure, and as I said, friends, I am assuming right now this entire structure of head and shoulder is in formation stage, and I'm assuming that 10,600 is not broken, especially on close. If that is broken on close on any day, then I would not assume this as a head and shoulder pattern. And of course, a head and shoulder pattern, as you are already aware, would be confirmed only and only if there is a breakout of 11,300. So watch out for this 11,300 and the 11,600 level in the next week, and I'm sure that this evaluation will help you to take adequate positions or adequate risk measurement steps for your existing positions. So keep profit booking at higher levels in any corrective rebound till the time 11,600 is taken away. And if it breaks 11,300, as I said, we should expect further selling. So I hope this analysis has helped you, and it will help you in the next week. Thank you very much for watching. I hope the next week will be a very active week, and those of you who are not aware, I would like to state here that every day in the morning around 10:15 a.m. I am uploading the intraday levels for stocks and index, that is Nifty and Bank Nifty and a couple of stocks. Every day I am uploading at 10:15 a.m. and these technical levels will act as a very good guide for traders who are doing day trading. So thank you very much, and please watch this channel. Please subscribe to my channel, CA Rajiv Khatlawala. Thank you very much.